What's up guys, happy Monday, Dirk here. So in today's video, what we are going to do is we're going to look at the Bitcoin and the Ethereum chart because the weekly candle has just closed, and I must say it is actually not looking good for the bulls at all because we closed back below the 200-week moving average. So let's dive into the charts and let's go and have a look at what this is telling us. So I have the weekly chart over here for Bitcoin, and you can see it's pretty ugly because we got this nasty rejection and a big outside red down candle. It closed below the 200-week moving average, which is the red moving average here on the chart. And what's interesting to see also here, obviously again not a good sign for the bulls, is that we got rejected at the exact low over here of this wick, became the top over here for the rejection. So that means the trend is still down. It's still very strong. You can see a similar thing happened here. The bottom of the wick here, we retested. This time didn't even make it to the top and continued a lot lower. So the fact that we are seeing this rejection, the fact that we saw a weekly close now below the 200, that is bearish in my opinion. And until we can reclaim this 200-week moving average, so we need to get back above there with a new weekly close to still consider the bullish option. Until that point, we have to basically accept what the chart is telling us right now, which is the bears are in control. The signal is bearish until it can be reversed, until proven otherwise. And that means that this could potentially be another bear flag continuation. So just like we've seen over here, right? Created this little bear flag and a drop. Then we got a bigger one over here, but again, still a bear flag. It broke to the downside and a continuation. And is that what we're seeing here right now? Well, that is very much still a possibility considering everything I've just shown you. And if we get this breakdown below, we could go down a lot lower because I do think the next level, if we break these lows, if we break down below this, could actually be this approximately somewhere between $12,000 and $14,000. You can see there was also, it acted as resistance over here. It acted as resistance in 2019. It acted as resistance again here. And only once we broke it to the upside, we got a massive rally. And this left an imbalance or a fair value gap around the same level once we finally broke through it. So it is completely possible, if you learn how these imbalances, fair value gaps work, they tend to get filled a lot of the time. So it is possible that we actually end up going down to this level if we do get a major sell-off. And if you've been following the channel, make sure you're subscribed. By the way, click that subscribe button, click the notification bell if you haven't subscribed yet. If you've been following the videos I've been putting out over the last weeks, I've been saying September is usually a shakeout month, and we could see a retest of the lows or potentially new lows, and that is very much looking like it could be on track still if we do get further sell-off. And the important thing here is obviously going to be, are the stock markets going to sell off this week or not? They are also at a critical point. So I'll show you that in a second. But before I do, let's go and look at the Ethereum chart and see what's happening over there. So similar thing with Ethereum, we got a big rejection over here at the 2030 level. And what's interesting to see over there is, again, that was the exact peak over here in 2021 that we got first from the run up where it pulled back and then went through above. And obviously there's a lot of activity here too. So that was the resistance so far, and we've pulled back significantly, almost 25% from that level. What's also interesting to know, I shared this also, is that at this point the options open interest on ETH was at the same level as the top in May and November of last year of 2021. So again, that was the third time the open interest was at those same levels. Was this time different? It appears not so far. So we obviously have the merge coming up. It's set to happen next month in September, in the middle of September. But again, we don't know if there's going to be delays. We don't know if anything's going to go wrong. We also don't know what is happening. The whole thing could be a buy the rumor or buy the hype leading up to the merge, and then a big sell-off close to it or after it, which we've seen many times with snapshots and with all sorts of events in the crypto space. It gets really hyped up. We have a big rally leading into it, and then at the actual time of the news or the event or whatever it is, it tends to sell off afterwards and go back to where it was before it started that rally, or even lower. So We got this rejection there. We are still above the 200-week moving average on Ethereum, but I mean, so far this is not very good for the bulls at all. So right now, you know, we'd have to reclaim this 2030 level and flip it, and then we can start thinking about getting bullish again. For now, you know, it's probably going to be in this level between the lows and 2030, but obviously, if Bitcoin's going to sell off and go to low, retest the lows or new lows, then Ethereum is likely to do that and potentially also go even lower than where it was. That is still completely a possibility. So be careful of getting bullish on Ethereum too early. And then finally, the last thing I want to share with you as promised is the S&P 500. So the stock markets are, in my opinion, going to lead the way for the crypto markets, as they have been doing for a long time. So as long as stock markets stay stable or they continue to go higher, that's probably good for crypto and we have a chance at recovery. The fact that crypto is down so much and we had this bear market rally while there was a huge rally in the stock markets, in the indices, that is really telling on what's going on. And if the stock markets roll over, then I think crypto is going to go a lot lower, and we're obviously going to see that scenario play out where we see a September sell-off potentially, and of course maybe those new lows, as $12,000 to $14,000 lows on Bitcoin. And obviously that means if Bitcoin goes down that much, altcoins are probably going to go down a lot more than Bitcoin, because that is how the relationship tends to work. So as you can see, I have two X's marked on the chart. This is 2008, and you can see what happened. This is obviously a weekly chart on the S&P 500. We got that initial sell-off to the 200 moving average. We bounced up to the 50, we got rejected, and then we got that major sell-off and the entire global financial crisis that was 2008, right? So now we are in a situation where we had something similar. We had this initial sell-off since November. We went down almost to the 200-week moving average, a little bit above it, had a sharp rally, but so far we got halted by that same 50-week moving average. And if that doesn't get flipped, if we can't continue to go higher over here, and we roll over and we break back below the 200 again, it's quite possible that we do see another repeat of a major bear market in the stock market. So we're going to have to be very careful to see how this unfolds, how this develops. Obviously, the bulls are hoping for a continuation here, maybe a small little pullback, and then more upside to come and flipping that 50 moving average. That would be really good for the bulls. It would be good for the stock markets, and as a result, it would also be good for Bitcoin and crypto most likely. But we get rejected here and we continue going lower, and we make new lows on the S&P 500. I think it's going to be pretty bad for crypto too. So be prepared for that. Keep a lookout for these levels. Keep an eye on the stock market. Keep an eye on these moving averages. And then we'll take it 1 week at a time to see what the chart continues to show us. And basically just listen to what the chart is showing us. If it's giving us a bearish signal and a bearish bias, you know, it's not a guarantee, but more often than not, you know, the probabilities and the odds favor that that is what we should be looking at. And that is the trend that we should be considering until proven otherwise, until the market shows us, well, that was maybe a fake signal, we're reversing it now, we're getting back above key levels or back above key moving averages. Okay, then it's fine. Then we can start flipping more bullish again in the short term. But now the signals are still indicating that we are flipping bearish once again. So let's see how it unfolds. Be sure to subscribe to the channel so that you can follow along. If you do want me to email you every time I upload a new video so you don't miss any updates, get on my email list. It is the first link in the description down below. Just click the link, enter your name and email, and every time I upload a new video, I will send you an email to let you know that you can go and watch it right away. Thanks for watching, have an awesome week, and I will see you in the next video.